What is happening, crypto crew? Get ready, because the news cycle is absolutely on fire today, and you need to know what's shaking the markets. We're diving deep into the most critical updates that could shape your portfolio, so buckle up. First, are institutions shifting their allegiance? We've got explosive data showing where the big money is flowing, and it might surprise you. Then, we're tracking a seismic shift in major asset prices. Is this a blip or the start of something huge? Plus, we're uncovering a groundbreaking development that could redefine how global transactions happen, potentially unlocking massive new opportunities. And finally, a game-changing integration is poised to revolutionize digital payments as we know it. Stick around, because you won't want to miss a single second of this action-packed briefing. Hit that subscribe button and ring the bell so you never miss an update. Institutions flock to Ethereum ETFs, outpacing Bitcoin in major shift. The cryptocurrency market is witnessing a significant shift in institutional investment, with Ethereum exchange-traded funds, ETFs, dramatically outperforming their Bitcoin counterparts in recent inflows. In a remarkable 5-day period, Ethereum ETFs attracted a staggering $1.83 billion, a figure that dwarfs the $171 million secured by Bitcoin ETFs over the same timeframe. This nearly tenfold difference highlights a burgeoning confidence and a potential rotation of capital towards Ether among major financial players. BlackRock, a key player in this landscape, is leading the charge, managing substantial assets in both Bitcoin and Ethereum ETFs, with its iShares Bitcoin Trust, IBIT, holding $83.54 billion and its Ethereum Trust, ETHA, managing $17.19 billion. Digging deeper into the data, institutional investors have been the primary drivers behind Ethereum's recent surge in ETF popularity. They accounted for a significant 68% of the growth in Ethereum ETF purchases during the second quarter, acquiring an impressive 539,000 ETH through investment advisors. This trend indicates a growing perception of Ethereum not just as a speculative asset, but as a viable long-term diversification tool akin to traditional assets like equities and bonds. The impact on Ethereum's price has been palpable, with Ether experiencing a notable 5% weekly price surge, comfortably exceeding Bitcoin's 2.8% gain. Analysts attribute this outperformance to the robust institutional buying activity and a renewed belief in Ethereum's underlying utility and technological advancements. Some market observers even draw parallels to previous market cycles, where capital has historically rotated from Bitcoin to Ether, potentially signaling a new phase of growth for the second-largest cryptocurrency. This influx of capital has contributed to Ethereum reaching an all-time high, underscoring the market's positive reaction to this institutional embrace. However, this rapid influx of capital is not without its cautionary notes. Research from Centera points to potential structural challenges, particularly concerning corporate treasury strategies that involve acquiring non-yielding assets like Bitcoin. These negative carry trades could pose risks during periods of rising interest rates or price stagnation, potentially leading to insolvency for some companies. The study suggests that for sustainable success, Bitcoin needs to transition from a store of value to a yield-generating digital capital. Despite these concerns, the overall trend points towards increased institutional adoption across both Bitcoin and Ethereum ETFs, with BlackRock demonstrating a dominant presence in both markets. While Ethereum ETFs are currently capturing headlines for their rapid inflows, Bitcoin ETFs still command a larger overall asset base, reflecting a complex and evolving investment landscape. But what does this mean for the broader market sentiment? Let's pivot to a significant price movement that's got everyone talking. Bitcoin price sees sharp decline amid market uncertainty. In a dramatic turn of events, the price of Bitcoin has experienced a significant downturn, falling below the critical $110,000 mark. This sharp decline has sent ripples of concern through the cryptocurrency community, prompting a closer examination of the underlying market dynamics and potential catalysts for this sudden drop. While the exact reasons are multifaceted, a confluence of factors appears to be contributing to the bearish sentiment currently gripping the market. One of the primary drivers behind this price correction may be linked to broader macroeconomic concerns and shifting investor sentiment. Global economic indicators, inflation data, and interest rate expectations often play a crucial role in the performance of risk assets like Bitcoin. Any signs of economic slowdown, persistent inflation, or hawkish monetary policy from central banks can lead investors to de-risk their portfolios, pulling capital away from cryptocurrencies and into safer havens. Furthermore, regulatory developments, both domestically and internationally, can significantly impact market confidence. News of potential new regulations, enforcement actions, or even uncertainty surrounding existing frameworks can create apprehension among investors, leading to sell-offs. The market may also be experiencing a natural correction after a period of sustained growth. Many analysts believe that Bitcoin had become overextended, trading at levels that were not fully supported by underlying fundamentals. Profit-taking by early investors and traders who had amassed significant gains could also be contributing to the downward pressure. This is a common pattern in volatile markets, where periods of rapid ascent are often followed by sharp pullbacks as the market rebalances. The increasing accessibility of Bitcoin through ETFs has brought in a new wave of investors, some of whom may be more sensitive to price fluctuations and quicker to exit positions when sentiment shifts. Moreover, technical indicators might be signaling a bearish trend. Chart patterns, moving averages, and other technical analysis tools could be suggesting that the market is due for a correction. The psychological impact of breaching key support levels, such as the $110,000 mark, can also exacerbate selling pressure as traders react to these technical signals. The interconnectedness of the crypto market means that a significant price drop in Bitcoin often has a cascading effect on other digital assets, including altcoins, further intensifying the overall bearish mood. The market is now closely watching to see if this decline is a temporary setback or the beginning of a more prolonged bear trend. This price action is certainly one to watch closely. But while prices are fluctuating, a major development is positioning Bitcoin for a new global role. Bitcoin poised as global settlement layer, a new era for institutional adoption. Bitcoin is on the cusp of a significant transformation, emerging as a potential global settlement layer that could fundamentally alter the landscape of institutional crypto adoption. This strategic inflection point suggests a future where Bitcoin transcends its role as a mere digital asset to become a foundational layer for international financial transactions, offering unparalleled efficiency and security. The concept of Bitcoin as a settlement layer hinges on its ability to facilitate high-value, cross-border transactions with greater speed and lower costs compared to traditional systems. Current global settlement mechanisms often involve multiple intermediaries, complex correspondent banking relationships, and significant delays, all of which add to the cost and complexity of international finance. Bitcoin, with its decentralized nature and robust blockchain technology, offers a compelling alternative. By leveraging its network, financial institutions could potentially streamline these processes, reducing settlement times from days to minutes and cutting transaction fees substantially. This emerging role is particularly significant for institutional investors who have historically been hesitant to engage with cryptocurrencies due to perceived volatility, regulatory uncertainty, and operational complexities. By positioning Bitcoin as a settlement layer, its utility is redefined, moving beyond speculative trading to a more functional, integrated role within the global financial infrastructure. This shift could attract a new wave of institutional capital, as firms look to capitalize on the efficiency gains and cost savings that Bitcoin-based settlements can offer. The development is further bolstered by the increasing maturity of the crypto ecosystem, including the advent of regulated Bitcoin ETFs, which provide a familiar and compliant entry point for institutional players. Furthermore, the integration of Bitcoin into global settlement frameworks could foster greater adoption of other digital assets and blockchain technologies. As institutions become more comfortable with Bitcoin as a settlement mechanism, they are likely to explore its applications in other areas, such as trade finance, supply chain management, and digital identity. This broader adoption could lead to a more interconnected and efficient global financial system, powered by the underlying principles of blockchain technology. The strategic importance of this development cannot be overstated, as it has the potential to cement Bitcoin's position as a critical component of the future of finance, driving significant institutional interest and investment. This is a massive step towards mainstream integration. Now, let's look at another groundbreaking development that's set to revolutionize payments. Tether's USDT on RGB protocol ushers in new era for global payments. A groundbreaking integration is set to redefine the digital payments landscape, with Tether's USDT stablecoin now operating on the RGB protocol. This pioneering move promises to unlock unprecedented efficiency, scalability, and privacy for global transactions, marking a significant leap forward in the evolution of blockchain-based payment systems. The RGB protocol, known for its client-side smart contracts and focus on privacy, offers a unique approach to digital asset management. By leveraging client-side validation, RGB ensures that transaction data remains private and is not broadcasted on public blockchains, addressing a key concern for many users and institutions regarding privacy in financial transactions. When Tether's USDT, the world's largest stablecoin by market capitalization, is integrated with RGB, it inherits these powerful privacy features. This means that USDT transactions can be conducted with a high degree of confidentiality, making them suitable for a wide range of enterprise and retail applications where privacy is paramount. This integration is particularly significant for the development of a global payments ecosystem. The combination of USDT's stability and widespread adoption with RGB's advanced privacy and scalability features creates a potent tool for everyday transactions, remittances, and cross-border payments. Imagine conducting international money transfers with the speed and low cost of crypto, but with the privacy assurances of traditional banking. This is the potential that USDT on RGB unlocks. It paves the way for seamless integration into existing payment infrastructures and opens up new possibilities for decentralized finance, DeFi applications that require private, on-chain transactions. The implications for businesses and consumers are immense. Merchants could accept USDT payments with enhanced privacy, ensuring sensitive transaction details remain confidential. Individuals could send and receive money globally with greater discretion and efficiency. Furthermore, this development could spur innovation in areas like loyalty programs, digital vouchers, and micropayments, where privacy and low transaction costs are crucial. The adoption of RGB by a major stablecoin like USDT signals a growing recognition of the protocol's potential to address the scalability and privacy challenges that have historically hindered widespread blockchain adoption in payments. The move also underscores Tether's commitment to innovation and expanding the utility of its stablecoin across different blockchain infrastructures. By embracing the RGB protocol, Tether is positioning USDT at the forefront of next-generation payment solutions, contributing to the broader vision of a more efficient, private, and accessible global financial system. This is truly revolutionary for payments. And that brings us to the end of today's briefing, but we've got a quick recap for you before you go. That was a whirlwind of incredible news. We saw Ethereum ETFs absolutely crushing Bitcoin ETF inflows, a major price dip for Bitcoin shaking up the market, Bitcoin positioning itself as a global settlement layer, and Tether's USDT making waves on the RGB protocol for payments. Don't forget to smash that like button, subscribe for more critical updates, hit the notification bell so you never miss a beat, follow us on all our socials, and drop a comment below telling us your biggest takeaway from today's news. We'll see you in the next one.